Monetary policy statement for May 2013. Inflation remained relatively subdued in April 2013, with annual headline and core inflation declined to 3.4% and 5.8% from 4% and 6.8% respectively in March 2013. Annual non-food inflation, however, remained stable at 6.8%. The monthly core inflation rate decelerated to 0.2% from 0.3% in March 2013. However, monthly headline inflation rose to 1.4% in April, largely on account of food crop inflation, which rose to 8.8% from 3.8% in March 2013. The output gap has narrowed, in part boosted by the reduction in the central bank rate from 23% in February 2012 to 12% in December 2012. The underlying economic momentum is expected to remain positive over the medium term. Real GDP growth for 2013 is now projected at 5.3% and is projected to rise to between 6 and 7% in 2013-2014. The annual growth in monetary aggregates also continues to show signs of recovery. Commercial bank lending has been restrained by structural factors, including those associated with the closure of the land registry. As these constraints are alleviated, we expect growth in lending to accelerate. Lending rates have continued to decline, but I believe that there is still room for further reductions. I want to thank those banks that have reacted positively to my appeals for reducing interest rates. In the medium term, core inflation is expected to stabilize around the Bank of Uganda target of 5%. Nonetheless, there are potential risks of stronger inflationary pressures emanating both from domestic and external factors. These include uncertainty in the global economy, upside risks to global commodity prices, and a stronger stimulus to domestic demand from the public and private sectors. In addition, energy prices are projected to rise in the near term. This will have a one-off impact on the price level, but it may also have more persistent second round effects on inflation. Excuse me. In the light of the above, I believe that a neutral monetary policy stance is warranted. Accordingly, the Bank of Uganda will maintain the CBR at 12% in May 2013. The band on the CBR would be maintained at plus or minus 2 percentage points on the CBR, and the margin on the rediscount rate will be maintained at 3 percentage points on the CBR. Consequently, the rediscount rate and the bank rate will be maintained at 15% and 16% respectively. This is the monthly policy statement.